So here we go, here's the hard right edge. This is in real time, and here we have a level that's been touched once, twice, and now we know we've got our level, and this is the third time. And you kind of expect this to occur as well, because you've had so many candles in a row, really with very little in the way of a pullback, certainly as it approaches the level. There's a very high likelihood that what you will see is a reaction off a level of support and resistance under that condition. So lo and behold, it's not a surprise this morning to wake up and see this. You know, I'm always expecting the potential for it at a level anyway, but as you know, that might not necessarily always unfold. But it doesn't matter. We just go through the process anyway, and in this scenario, it's working. So what's happening here is, and as we've discussed loads of times now, you know, this is not an area where there's tons of stops sitting there. It just isn't. Just because it's a level doesn't mean there's stops there, as we keep talking about. What guarantees the stops is this part of the overall process, because this is a nice daily chart on a level. Fundamentally, the US is stronger than Europe, and you know, this is a great place to sell high, right? But if something big needs to do some selling where everyone else is going to try and sell off this level, that's not going to work because of slippage. So what guarantees that stops will be here now is this process which is unfolding, which is our entry cheese, because lots of support resistance traders would have eyeballs on this because of the time frame, because of the clarity of the level. It's literally millimeter perfect. The entry cheese now is giving them the optical illusion that the level is actually going to hold as a level of resistance, and by the way, it might well hold as a level of resistance, right? I can't legislate for that. All I can do is understand the process before that occurs, where a manipulation and the conditions for one are present. Doesn't mean it will turn into one. Not every trade turns into a setup, or not every potential trade turns into a setup, but this is how it starts. And lo and behold as well, if you were ever to have some entry cheese which is, you know, very convincing for those traders at the hard right edge, it would be an engulfing candle. Now granted, it's early on in the day, we certainly haven't closed yet, so this might not be how it looks ultimately, but this is how it looks currently. And what's interesting about that is, even if, imagine that was to sort of fail, and by the end of the day, let's say it turns up, right, it starts to head up, at some point this was an engulfing candle as a live candle. So this actually works to convince traders in, giving them that optical illusion that the market was heading down, when in fact it's just dragging them in, and the opposite is going to happen. Either way, it makes no real difference. It's just an interesting idea to realize that you know, a doji wasn't a doji all of its life. On a live candle scenario, it was once potentially a very strong looking engulfing candle. It just didn't close there, it reversed. And that's it. That's really important to understand. You know, if you've got a bull candle here, and this had totally engulfed it, as in this case, but then it turns up by the end of the day, it doesn't close there. It's important to realize that that was engulfing, and it looked engulfing. So part of that optical illusion, that is how we trade. We're trading based off the fact everybody's not thinking in these terms. Everyone's not trading this way. They get caught at the hard right edge, and we don't. And the whole illusion starts from the level, the selection of the level, number one, because you know traders are going to be there. You know, be selective with your levels, guys. That's what I would really try and sort of hammer home, because the more selective you are with the level, the easier it is to understand the process. The easier the clarity is there, and the process is more likely to unfold under those conditions. Because if you've got more traders looking at a really pretty level, it follows that more traders are going to take the trade than a level that is a little wishy-washy and uncertain. If people are uncertain, you know, it might not be such a level, and because of that, then there's not as many people trading it. If there's not as many people trading it, then there's not as many people placing stops. If there's not as many people placing stops, then it's less attractive for a manipulation. So be selective with your level. Make sure you've got a cracker. And obviously, you know, there are degrees, varying grey areas within that, right? Sometimes the level's not a 10, sometimes it's a 9.5 or a 8.7 or whatever, right? Some of them are slightly less good, but you know, so long as like you've got this understanding of what a decent level is and what a real primo version looks like, and you're sort of staying within those parameters, you know, you're going to be fine. Just ask yourself this very simple question: if you were a level trader, would you take this level? Is this a level of support and resistance you would take, you would consider? And if the answer comes back with a yes, then you're good. If the answer comes back, oh, I don't know, it's a bit sketchy, then of course you've got your answer. Don't be in a rush, because a lot of these trades, you know, totally play out. They're worth hundreds of pips. So there's no need to rush and panic that you aren't taking a trade on a daily basis. And the other thing I would say as well is, you know, when you're in those downtime moments, these are the times where you've got to spend mastering your craft, looking at where you're weak, looking at where you can improve, and then, you know, doing the work yourself, and maybe with the help of some other experts, to improve in those areas, so that you're not just wasting your time and sitting around twiddling your thumbs. You know, good trades aren't everywhere. It's a myth when people talk about that. The edge isn't everywhere. Edge presents and it goes, and then there's no edge, and then it comes back. Hopefully, anyway, that's the idea. And then you act, and then, you know, the edge isn't there again, and you took your trade. The outcome is the outcome. And then, you know, what do you do if you haven't got a trade for 3 or 4 days? Well, you don't sit on your ass and do nothing. You critically look at yourself and how you can improve, and you do that work in those ensuing periods. Anyway, a bit of a rant there, but you get the idea. So this the optical illusion comes from the quality of level, because that's going to start that process off. Then it is a question of entry cheese. You know, is it convincing at the hard right edge? Well, it's always different, as we know, but it's always the same. So, for instance, you know, this could end up being several negative candles, but it could end up just being an engulfing candle. Now, ask yourself, would a singular engulfing candle closing below the prior candle's lows and at its lows, right, at the end of the day, would that be enough off that level to convince you to go short if you were a support resistance trader? Now, in my opinion, that would be enough, but it might turn out to be 2 or 3 candles. You never know. The more the merrier. But that is definitely a very, very enticing type of candlestick pattern at the hard right edge at a nice level of resistance. That will get the vast majority of level traders in to pull the trigger and take the trade. And as we've discussed, is that we're just sat here, we're waiting and watching this unfold. That we're just letting them people get hung. They're hanging themselves because the moves, we're watching them, and they're not paying attention to what's coming in the future, right? The hard right edge. All their focus is in here. And you know this to be true. So we wait for the entry cheese. We realise that these people are not considering that this hard right edge is going to fill. It just requires some time, right? It's going to fill with price. All that has to happen is some time elapse. And this entry cheese makes their moves with regards to risk management very, very, very obvious. They will place the stops above the structure in here. And now, all of a sudden, what we have is we have money there now. We have money in the way of those stops. There's liquidity. There's liquidity there for institutions to transact efficiently if that is what's going to happen. So, what could happen next? So we've got our stops starting to build now. And as I said, you could get, just for the sake of the example, you could get a couple more negative candles, right? Definitely could happen. And then let's just say you get this big bull candle coming up through the level, followed by another one, right? And when that happens, that's when the stops get done. Way dodgy T. Stops get nailed, right? And if those people in here were selling, with the hope of that going across the range, which is what they were doing, they would place the stops above there, and those stops are buy orders. And as it comes up through the level, it's a forced liquidation event. Those buy orders start firing off, allowing something big to start selling in the face of that buying. Right? Has this happened yet? Is this real time? Yes. Has it happened yet? No, but it's the process. It's how it can happen. Comes up through the level. It also convinces in our friends, the breakout traders, as it does that. Again, more buy-in, some type of pullback you would anticipate, and then boom. Something like that will unfold. Is it always the same? In principle, yes. In the way it presents, no. And that's a good thing, because that keeps people from seeing the patterns. It keeps people from figuring it out. So yeah,